Let me get the recording software going. Double check that it's working. All right, cool. So, any questions right here? Would you consider this 10 a.m. setup valid? I ask since I actually wanted the sweep, but it looks like it worked on YM. Let's go take a look. 10 a.m. MNQ. So we'll just replay back 10 a.m. MNQ. So I wouldn't really consider this as a long entry right here. And let's talk about why. We'll hop into NQ. And this comes down to your short-term targets, right? If you want to get long, right, you're ideally want to be positioned long prior to those overnight session highs getting taken out, right? So those London highs or these equal highs here. So when those get taken out, right? Yes, we have a nice strong move and a closure over, right? And yes, we do reach into a fair value gap. So mechanically speaking, you could say, yeah, it's a protected high, but you have to think a protected high to deliver to these highs, right? If it takes the high, you really want to be entering long after it just took out the high, or do you want to wait, right? Now, I prefer to wait because let's say price goes like this and trades higher. I accept the fact that I'm never going to catch a long over a high and just catch that move. I'm just not going to catch that, right? Where I can catch it is if we retrace into here, right? I don't want to enter on it because we can get a new phase of price, right? Because this is where most of my losses came from early on, is I would enter something like this and then it would just stop me out, right? So why not wait for this area to either form a swing and start to trade away and get a continuation entry, or for it to trade lower and then go if you're still bullish, right? And so then if you wait for that, this is not a retracement candle, right? So this is a consolidation range. That would be a reversal. It sweeps out the low. Then if you're still bullish, you can wait for a bullish candle closure, which now we have one here. And then where would you want to see a continuation from that? Well, a close over here. Even then, I'm not the biggest fan of it. The only reason it could make sense is you're pairing it with the 4-hour candle, right? So you want to let that wick form. We close over. Fail to close over, we sweep the high. Do we get a retracement? My eyes would be in here. Let's see. And then see, I don't even think I would get long in here or trust this. So it's just very messy in there. That help, Shinobi? The main thing that I'm asking myself, yeah, you have the same thoughts. That's good. The main thing I'm asking myself is if we just clean up our charts here, let's just give it some very simple logic. Oops, let me clean this up. After taking out these overnight highs or these session highs, do I ask myself and say, do I trust that this low is going to hold price, right? And sure, maybe if we have like a very long wick here, like I could say, yeah, I don't think price should go right back below here. That could make sense. But when we have just a super shallow wick in there, it's just not something I generally trust. If you look at YM, it's worked. Let's see. So let's see. So here's, I think the thing is with YM here is you see how YM hasn't taken out those overnight highs yet, right? So if I wanted to get long YM and I see this, that could make sense. And we take a look at this low, right? This is a much more of a deeper run, right? It's not like a very shallow wick right into this fair value gap and then blast off higher into highs. So that's something where, you could consider that. And even then, if we go back to my scenario I was talking about, let's say I wanted to get long in here. What are my two options? Well, let's just go back again. We form a swing in here and we respect, or we go sweep out a low and then trade, right? I let the candle closures tell me what is up. What happens? That is respecting this fair value gap. It's respecting 0.5 of this. Candle 2 closure. Does it close over? Let's see. It does, right? So you see how that makes a lot more sense because we have left these overnight highs. You took that trade. Nice one, Big O. But yeah, the main thing there is it's just, if I want to get long, right, in a New York reversal, I want to be positioned prior to the highs getting taken out. And you'll see this from me. I'll miss these moves, right? I'll miss these type of moves where it takes out highs and then just trades higher if I'm not positioned prior to it. Because that's just something I struggle with. I can't long over highs. Good thought process. Yeah. And if you've been around here long enough, you'll see that, right? You'll see the trades that I miss too, where it's like, oh, you could have taken that continuation. It's just not really something I prefer to take. But any other questions? I think what we'll go over real quick is actually, we can look at this current price action, right, on 5-minute. Right. Let's take a quick look. This is something where we do have a change in the state of delivery, right? We do have a valid setup. This is one where, hey, price could trade up into there, right? Could trade into here. You'd have to let a swing point form to look to trade that, or you need to drop down to a lower time frame to find a swing, right? I could do something like going down to a 30. If I have a swing, well, we didn't really form one until this sweep, and it already expanded away, which if I'm trying to position my risk, right, I want to be in there or up there. Doesn't really make sense to our first target, right? So that's just something that I would miss. But hopefully you understand why the anticipation makes sense. New 4-hour open, we have a wick formation. Price is opening within a fractal model. Would you be thrown off by NQ and ES taking the high if YM was? I don't really trade YM much, but I would be more so looking at it in terms of with RTY, right? So we go YM, RTY. Right. I would be looking at these two and see how they trade away. So maybe it throws me off that, no, I don't think I would be that thrown off because the overnight highs haven't been taken on either at the time. Maybe I get thrown off a little there at the fact that RTY swept it. But then again, it's like, okay, if your bias remains, don't just blind limit in something here. Let a swing form, right? I don't have to know if this move is going to go and form a swing or if it will drop. I just let it form a swing or I let it drop, right? I don't really have to guess. I just say, oh, we have formed a swing. I can ride this trend higher, right? Or I just drag it over there, right? We formed a swing. We've closed over. Sure, I'll take this and see if I can ride it higher, right? Once again, I still prefer to be positioned prior to the highs getting taken. EU was nice at 8 a.m. using DXY candle closures as a framework. Let's go take a look at DXY and see if we can get a good example. You said hourly. So first thing, we'll start at the daily. It's a bit messy there, right? So I don't think I'd have much of a bias going into today. But then that's where you just have to use the intraday profile. So looking at the intraday profile, I just ask myself a pretty simple question. Open high, low close or open low, high close, right? What do we see? We don't take out this low. We open, we sweep this high. Do we form the entry sequence? Technically, yes, with the closure, but very weak, right? But then we get the sweep in London. This move lower is a bit more convincing. You can use these opposing candles, right? And then this candle, why is that an opposing candle? It reaches into an important level, closes through. And this is actually an ideal formation, right? So if you go through, I'll have a video up on this after the stream, but the ideal candle formation is when you have a candle closure that is validating the high at the same time that it's providing a bias for the next candle, right? So we have candle 2, it's makes a high. Candle 3 not only forms a swing point, but closes through here. So then I can anticipate this next candle to do what? Go lower. I can use 0.5 of both of these as a reference point, which line up exactly. So if we go to the 5 minute here, right? Oops. This is what Shin was talking about. Now with this, let's say I wanted to take it positionally. Where would I have to have my stop loss? Well, I need it above here, right? Now I don't really trust these highs in here because they're just all failure swings. So this is where I prefer to let price do what? Make the wick in this candle. So open needs to sweep out something, form a swing, or that intra-candle change in the state of delivery, and then can go lower. So if we take a look, let's see what happens. Okay, we do get that move higher. And you see how all those failure swings get taken out. So now this is something where, let's say I wanted to take a more risky entry. I could do that here. I'll let one more candle trade. Okay. Not quite the intra-candle change in the state of delivery, but for me, if this is going to be an expansion candle, I expect that high to hold, right? And look for 2R there. Let's see. Nice 2R. So yeah, that is an example there. And you see how, right, we swept out this low. That gives us the anticipation that, hey, I need to let it trade back into the range. Right? I'm not trying to short below lows. If I was to take that positional entry, see why I wouldn't do that? I have all the failure swings. There's nothing I can trust. Let's say we came in and we have this candle that looks like this, right? That then gives me something to place my stop off of because it gives me a protected high. But in the case that I don't have one, then I'm just following that whole sequence, right? Now, I went there, I did that a little bit more discretionary, right? Because this is just a candle 3 closure entry. If you're waiting for the intra-candle change in the state of delivery, you either miss it or you're going to have to take the retest, right? At least that's how I view it. Because let's say I want to enter on the close here. It's just a bit of a wide stop loss for me, right? Either there or there. Does it work? I mean, we can let it play out and see if it does. But the way I prefer to view things is, okay, if I want to see price go to these standard deviations down here, -1, because we have a wider range, I want to just be able to adjust my entry a little bit to manipulate that into 2R, right? So something like that. Versus, let's see what it would be. Would I still get in on the closure and get 2R? I don't know. Okay. Yeah, we still do get 2R, right? And maybe I need to zoom out because we're pretty deep into that 5 minute to see where we're actually at. But yeah, if we're going to fall through these lows, go for those lows. But that's a good example. SMT there too. Yeah, I can look for SMT. So this was on DXY, so we'll talk about this real quick. If you're using DXY as a framework, right, then you can trade Euro off of that, Euro or GBP, because that is what correlates it with the majors. So like, let's say this, we can just go real quick, take a look. We go to Euro GBP to determine what is stronger or weaker, right? And we take a look at that same time. Let's go look at the higher time frame first, right? Equal highs of the highs, reach into a fair value gap, reversal made off the low. Pound or Euro is stronger than pound. If dollar is going lower, we want the stronger one. So then Euro USD would be the better pair to be watching for that setup, right? And then that's where you have that SMT because that was traded lower, right? So, and that's a case where it's like, hey, this isn't technically a valid fractal model here on Euro, but it is on dollar. So you're trading the dollar framework on Euro. But that's why it's a bit, complex. Is this recorded and going to the recordings on WAP? Yes, all of the streams in this Discord will be recorded and put in WAP. What is the intra-candle point in time that you don't take the trade? Actually, yeah, that's a good example. Let's go to gold today because I was watching this in the morning. So let me explain this framework real quick. I didn't really have much of a bias on gold because it's very bullish, right? Commodity is just bullish right now, as you can see. but I view it as we have expansion and then we have this closure back in. Right, so with that, I could say, hey, I could see price retrace or reverse, or at least go reach for previous day low here. So that's kind of my idea here. Now going to the hourly, we're just consolidating, right? Like up until the day, you see how we're just range bound here? We can go till here. Oh, we're on the hour. See how we're just very range bound if I show the daily candle? Right, we're just stuck inside here. So I'm viewing it as a range. And if I want this high to remain, right, then I wouldn't want to see it trade up there. And I see that we sweep out all these highs on this range, right? So right there. And I see we have some failure swings down here and that framework to trade to previous day low, right? So with that, right, and if we pull up my fractal model on this time frame, right, you go through this on the hourly, you'll see a bit above the T-spot. That's fine, but the framework's still there. So sweeps of consolidation. We have a candle 2 closure here, right? That's the main thing. So it's like, hey, we have formed this reversal. Can we get a continuation lower? Now, let's drop down to the 5-minute, and I want to explain something. When you're looking for targets, you can use these higher time frame candles, right? So that's what I was looking at, and these lows were just left, right? That means there's equal lows on a lower time frame. So looking at that, I say, okay, we have equal lows right here. And then let's mark this out all out, right? We have candle 2 closure. Do we have a change in the state of delivery? We do, right? And that is because if we find this high that made candle 2's high, we go find that high. What are the candles that made that? This series of up close candles here that makes that change in the state of delivery. So now what we can mark out is we know we want to see 0.5 of this wick be respected, which is this level, and 0.5 of these bodies be respected, which is this level. So let's highlight those real quick and we'll just throw them over on the chart. I know we want to see this area be respected, right? In here, as well as this area here. So I'll draw those out. This is kind of the area we're looking for price to form a high in, right? Which it can open and just do that, right? So for me, we're retesting this area. We're in a fair value gap. I want to say, hey, if we can form a swing point right here, I could possibly look short, but I just want to be able to go break even or partial at these lows, right? If I let price form, you can see there's where the indicator does it. So we'll just remove the drawings to clean it up a little. And I see, yeah, we have a little down move there. It's still not anything I can trust because when we open this candle, I want to ask myself, do I have a high that I think is going to hold? Because I want to wait until this candle has a high in here that I think will hold, then I can trade it lower, right? So I let it go and I'm like, no high I trust. Go again. Okay, we're going to take out a high again. Now I have to wait. This is the first time where I'm like, this is actually something that could respect, right? Because we're respecting 0.5 of these candles here, right? We're respecting the wick. We have the failure swings off the low. So if I wanted to take a risky entry, right, I could do something like this, right? Cool. I didn't really feel like doing that just because silver was so strong at the time, right? But as we let it continue, that fails. And now at this point, I'm like, we are trading higher. Is this likely to fail? Well, let's see how it trades back lower. Because there are times where it'll do something like this, a very aggressive drop lower and then expand, right? But generally, what this means is it's not that price can't reverse. It's unlikely to be an expansion candle, right? If it's going to reverse, it's going to come back, and I can just anticipate this to be another reversal candle and then trade the fourth one. So now I can really just wait until 11 or consider it invalidated. This is where I start to see it as invalidated because what? If we want to see it come back in, we would have to reverse here. It doesn't reverse, it actually just forms a swing point here. And now respecting down close candles. So at this point, okay, it's likely to just fail and take this high. Now, I don't have, going back to the question, I got a little off topic. I don't have a defined time period where I'm like, hey, after 25 minutes, I can't look for a setup, right? But I generally prefer price to form that high in the first 5 to 20-ish minutes, 25 minutes, because you have to think, we only have this much time for price to expand in one direction, right? So I've used the rope analogy. We have a certain amount of time that we can place a bunch of rope, right? If we put down a ton of rope right away, right, then price isn't likely to, right? It's going to run out of rope. So that's why if we expand so much, it's going to consolidate, right? But if we form this quick high with a little bit of rope, then we have all this time to lay down the rope, right? Versus what happens here is we're wasting all this time laying all this rope. You really think that price will go right here and in the last 15 minutes just do that? No, it's not likely, right? So I don't have a defined time. I'm just mainly looking for that first 20-ish minutes, right, to form a high, because that's really what happens in expansion candles, right? That makes sense? Like, look at this expansion candle here. When's it form its high? Well, right away, but it starts expanding after those first 20 minutes. Then it gives it time to expand lower. Quick question of your indicator. Does it lag behind when it has a CISD? No. So what happens is it, as we just showed, we can go back to ES right now or NQ because it was showing that short setup, right? Oops. We'll type this in, right? It's been going lower. Cool, right? Awesome. It just hit the first target. Now, it does exactly as the flow chart, right? So let's say we have a change in the state of delivery, but no candle closure, right? It's not going to mark because it always, how does the flow chart work? The flow chart always goes, okay, do we have a candle closure? Yes. Then we check for the change in the state of delivery. It's not the other way around. We don't say, oh, do we have a change in the state of delivery? Does this closure work? No, right? So my indicator will print once we have both of those, right? So in this case, that's why I was showing it is, hey, we have a short setup here at the open of 2, and that's because we have the closure, then we have the change in the state of delivery, then we can project out, get our targets, right? And then we'll see one thing real quick. Yeah, you could, really the only way to get into this with any sort of entry would be the 1 minute, right? But does that make sense kind of with the indicator? Let's see. Dennis, did that make sense? That was your question. So it's not exact, but I mean, if you want something really exact, maybe do half of it. So half of the higher time frame candle. So if you're in a 30-minute candle, say, hey, I want to see this high form in the first 15 minutes, right? Or in this hour, I want to see the high form in the first 30 minutes, right? That's gonna be probably the least limiting, but probably a decent filter, right? Because that's generally what's gonna happen. There are gonna be times when it forms like at 30 minutes, right? And then goes, but I don't really have it mechanical in that way because that's not how I think about it. How come you were bearish on indices? So the main reason I was bearish on indices, let's go here, right? This is what I was watching this morning. And going into the morning, I was looking at everything, but it was this, right? If we go, let me explain this. Right, and it did form a low where, yeah, it would have to form a low, but let's replay it. That's interesting. I actually have to replay this or else it's not going to make sense on playing it. I hope it works. There we go. So the main reason I was bearish was I'm thinking of the daily formation, right? If you know, last night I said I don't really have a whole lot of bias for the indices, right? Because we have a strong bullish closure. But, right, I'm still a little bit bearish. The structure is not amazing for me. The whole thing is, do we open, make a high, trade lower? Or do we open, make a low, we start trading higher, right? So I take a look at this. What do we see NQ do? It opens, immediately takes previous day high, and then has that change in the state delivery, right? And I think Tristan, someone caught these shorts, right? Which is cool. That's a great move. That's like the only time you could really take something in Asia like that. But when I see that occur, right? My mind thinks, okay, it's going to go back to 0.5. If this fails, then my mind just always goes to previous day low, right? That's just how I think mechanically. If this fails, it's likely to go take that low, right? So I'm watching this. I see it fail. I'm like, oh, we can go take previous day low. Now, what I was talking about with RTY was I watched all of these, and the weakest one was RTY. And so I was watching RTY took its previous day low, right? And so really I wanted to see how does RTY trade around this? I wanted to see it fall through it, because if it's going for this low, then that would take NQ and ES with it, and then you could trade that lower on the other indices. But yeah, that's the main thing for me. Why I was bearish was just the daily formation. Now, the thing that was bullish was if you take a look at the structure in here, right? The 15, 30 minute, go like that. Remember what I was saying about failure swings, right? You see all that. But let's go back to that. Go back to that 30 minute or that 5 minute setup on ES, right? We were just talking about that, so why not? Right? Cool. I think ES, man, we should have watched. I was watching NQ. ES is way better. That's your ideal candle 2 closure right there. So that's actually a very valid trade for an afternoon session. So I don't know if any of you guys caught that. Let's see. Raphael answered that. You had your entry there. How come you were bearish on indices? Yeah, so that mainly it's like the closure says bullish. The intraday profile said bearish to me at the time. I prefer continuations over reversals, so that's how I do. Hey T, can you go over USD JPY April 1st? Candle 2 on daily took a loss on candle 3. Yeah, I'm not going to look at your trade yet. I'm just going to hop in and do it. So I find that's the best way, because then it's like you're getting raw feedback without me, like, I wouldn't say cheating, but it's like if I know what's going to happen. Oh, nice. It has the exact same afternoon setup as ES. That's crazy. Look at that. The exact same. That's wild. Anyways, let's go to the daily. So were you bullish or bearish? Let me go back to channel 2. Okay, yeah, you were bullish. USD JPY. Let's go take a look. I was just double checking I had your same bias. What broker were you on? USD JPY. I know it can mess with the daily candles a little. Yeah, like a lot. USD JPY. I normally click on forex.com, so I don't know. Let me see what broker you are on. Drewski, if you want to answer that. Wait, actually, maybe I can see. No, you don't have it on your chart. Hmm. Yeah, I mean, I'm gonna go take forex.com. Sick. SDJP. I just want to do it that way, so it's we're on that one. So let's replay it here. We can go over it. Now, a few things here. Right, we have this candle 2 closure off of that. Generally, you want to see this day expand, right? And that's the day you're talking about. For some reason, I thought you were talking about today. But yeah, correct idea on the daily bias, right? We have this structure. It's nice, right? And then we want to see this expand. Not the biggest fan of having this close below there, right? That's one thing, because if you think of opposing, like I always like to frame things in the other way too. We're having a bearish setup here where this is bearish candle 2 or 3, right? Fails. But anyways, let's go in. We'll use the indicator, right? And then we'll go down to the hourly, right? So let me play ahead here. I'm going to just switch this to bullish so we don't get the bearish one. All right, so we can look in here and identify, do we have any point of interest in this area, right, that we want to see hold, right? And it's not really clear, right? Because can I say that any of these lows in here are protected? For me, not really, right? Because I take a look at this low. It never reaches into a point of interest, right? Or really sweeps enough to say, hey, I can trust this low, right? So I give myself two scenarios. Okay, if it does respect this area, cool, right? And then I'd have to go close over to trade higher, right? If it doesn't respect that, sweep out this low, trade higher. Does that make sense? Those two scenarios I give myself? They're just two if-then statements. If price forms a swing here, closes like that, low a day should form. If it doesn't, should sweep out the low. Let me double check. That makes sense, hopefully. Anyone in chat can confirm. Just trying to make sure it makes sense. Makes sense? All right, cool. So I let this play. We can just go hour by hour. You don't have to check the chart other than close of the hour. Okay, cool. So something to note here, if we would have had a close over here, I would just consider that because we swept out this low here. And then if we had a strong close, it's like, it's just going to trade higher, right? Doesn't do that, which means, okay, we're likely to make a new low. Let's see. Okay, we make a new low. Now I want to see. We would need a pretty aggressive move back over this. Okay. So now at this point, right, you have to think in terms of reversals, right? Let's think about this. If we have a reversal into a point of interest, the whole point of a swing and then a close over quickly is because that's a expansion on the, so expansion met with expansion, right? That's a reversal. That's what I want to see. What do I notice here is that's a fine closure, right? Cool. I could anticipate that this be low a day, right? But I want to see this trade expand or this one go expand, close over here. When it doesn't do that, that leads me to believe what? It's going to fail and make a new low. So now we can wait for this consolidation. Now we're kind of breaking out to this low. It's just likely to go take this low, seems. Okay. Let's see. We could consider this. I'm just not a fan of it leaving this low now because this was my point of interest. So I'm guessing this is what you took. Something like that. Because mechanically that's the only first entry possible. Let's see. Stops out. Yeah. So I think it's valid. It's just now you're very close to this low that it's like, why wouldn't it just take out that low? You know? But I'd say that's a valid loss. See if there's anything else that comes up. Okay, we take out the low. Now it's just like failing basically. Right, so now at this point, this is what I mean is when we have a price not holding this level, it's not that price can't reverse. It just means that if it reverses, it's unlikely to be an expansion candle. It means that I would be looking back towards targeting at the previous days. Or not the previous day, but the daily open, right? So we form a swing, right? That looks a little bit better. It's not going to be mechanically on the hourly. Let's just see if we could frame something. 30. Really, the only way to frame something would be in here, trading this long. Yeah, I don't think I'd catch that. Yeah, just nothing, right? You can see it does trade back in reverses, but that's just not a daily candle that's interesting. So I'd say it's a valid loss. The only thing that you could really pull from that is like, hey, we're pretty close to this low. There's a big difference between a low like this and a low where, let's say we had a fair value gap. We reach in and then we have that same formation. That's like a low I can trust, right? Versus I just can't trust that. You know what I mean? But yeah. All right, let's see. We'll check back real quick at what ES is doing. ES and NQ, see if they're still falling. Ah, nice. Did NQ hit that fair value gap? Yeah. Nice move though. It hit the targets, yeah. Let's see, I gotta go to the 5. Just missed that one. That one. Nice, it just missed those targets. That's a bit annoying. But all right, let me answer more questions here. EOT, for that YM move, I was looking to get on side with 10 a.m. 10 a.m. opened and confirmed the ICSCs. I was going to take 1.2 R to London highs, but it felt too close. Plus, it got you all conservative and shit. Yeah, I mean, that just comes down to personal preference, right? Like for me, right, if I want to take this YM trade after 10, I'm wanting to partial out here, right? Or be able to take profit, right? So I'm assuming you took something like this. Let's see. Let's see, you were doing something like that. Maybe you shortened your stop to there. Yeah, you did that, didn't you? Something like that. See? The only thing here is like, yeah, I'm not a fan of you missing it, honestly. Like I'm not opposed to missing that. It just that more so comes down to your bias of, hey, are we gonna take previous day highs? If we are with these equal highs, that lengthens your target, right? So then if that's your ultimate draw, it's like now you have a trade that makes a lot more sense. Right. Like I don't think you're wrong for missing it. But you know that I'm slightly more conservative, right? You knew when you answered that question that I would probably be in agreement with you, right? I'm struggling with this price action with large wicks. So when you see price action like that after we take out a low and we have large wicks like that, that's because you're trying to trade consolidation and it's going to be pretty tough. That RTY that you were watching. Let me go back. Yeah, Russell. So we go back to RTY here. If you go into my course, right, I just added a little section in there. Like when we get a new phase of price, right, we have expansion. We're either going to do what? With a candle closer like this, we're going to either expand out of this or we're going to have retracement, consolidation, right? So we could still reverse, right, and trade higher aggressively. But at this time, after this close, it's like, hey, this looks more like a consolidation, right, or a retracement. It's like this is a lot harder to trade than something that's just set to expand. So I wouldn't feel bad. Like if you look, I don't even think I haven't gotten a trade. AM hasn't gotten one. On that NQ, ask if we caught. If the opposing candle was a doji type candle with wicks on both sides, would it make it a probable trade? So if we go back to ES here and explain the question, go to the 5-minute or 5-minute template. The question is, hey, if this candle was a doji, and let me see if I can go to like a time frame that would make it a doji. Let's see if like a 2-minute for some. No, I don't think it's gonna. But the whole thing is, let me see if I can just find an example for you. Like we can just use this as an example, right? Let's say this was the high, and I'm just gonna draw it so it's a doji, right? Because then I can explain it. Right? Let's say it's a doji like this. It doesn't mean it's lower probability. All it means is it's a lot harder to trust this high to hold on this next candle, right? And so then I'm just gonna wait for the closure through here. Right? That's all it means. Versus like something like this, right? That candle's a lot more like if I just showed you, let's see if I can screenshot and paste these. If I just have this and I have, oops, and I have this. Right, let's take a look at that. On this next candle, right? So this candle, who has more trust that this high is going to hold here or this high is going to hold here, right? Like that's my mindset is like, hey, I trust this one a lot more. So that might be something that I can just enter, right? Versus this, I'm not going to really enter that right there and have my stop there and just have it sweep out again, right? No, I'm going to wait for it to go, oh, we'll actually trade away, right? So that's the whole, I don't have a, hey, this is more probable. It's just within the given context, what do you trust? Let's see. When will the remaining videos in the fractal model content show up? Well, I have to upload the second section ones today, and then I have to record the rest. I had the ones I have recorded right now and then edited, but I messed up the editing, so I had to redo all the editing. Let's see. Timing makes sense. I also wondered this, for example, for daily candle forming on Forex. Let's say halfway through the day we are on C3 after a C2 closure. An example looking on the hourly. Why is they watch New York open? Yeah, so let's see. That's more dependent on what the profile is, because let's say you're into, right? Let's say you have open here, you have London in here, right? And then New York. It's like if you open up and you have London like this, and then you come into New York and you're bearish, right? You expect New York to continue. If you have London, right? Trade higher, right? We just grind higher, you're bearish, and you expect New York to continue lower. It's like you're expecting this reversal here, New York. Right? So it's more about the daily profile. I think maybe unless I'm misunderstanding your question. Does the manipulation like have to take something for the CISD to be valid? And no, so it's more about that. It's just about the closure, right? So go to this one, for example, right? Right? Like I'm not worried really so much about, hey, did this need to take a short-term point of interest? Like I don't really care about that because what? I'm not trading this reversal. Right? I'm trading a continuation. So I'm letting this reverse by telling me with the candle closure. And then up in here, this is where I cared about the points of interest. That makes sense? Like, yes, it's ideal to have a manipulation leg that sweeps something. Can I use your model in conjunction with Kane's model? Funny enough, he just walked outside. That's what the beeping was. But yeah, you can, right? So like Kane's model would say, hey, we'll go to a 3-minute because he'd actually trade something like this. His model would be, hey, we have a reach up here. Let's say we had SMT. He's looking to trade this inversion right here, right? And he'll be like entering on the retest or the closure, whatever, stop on the high, looking for those lows, right? All right, so he'll take this and then trade that. His model will always occur before mine because he's trading this reversal. I'm trading the continuation. So like if we're back on the 2-minute here, right? If he's in here, and we'll just use this target that actually hit for the sake of the example, right? All these failure swings. If he's up here, he's always going to be in before me, right? And then I'll trade the continuation, right? So could you trade them together? Sure, right? It's just I prefer the continuation because it has a higher hit rate. He's fine with stopping out 3-4 times, right? 2, 3, 4 times. Because like, for example, I've watched it. It's like he took, 2K stop outs and then he makes 30K, right? So it's like he doesn't really care about that. I just prefer a higher win rate, higher hit rate, right? And I like the continuation. That's what I do. Could you trade them together? Sure. You'd have to trade this first, and then maybe you could add in here. So like, let's just, for the sake of the example, go and do it, right? Let's just say he's in here. We'll just give a position like that, right? And his stop loss is there. We'll do some Kane size here, and he's looking for there, right? How would you trade this together is that's his model. And then once my model forms, there's my model forming. Let's say I wanted to trade it. I went too far ahead, right? Something like that. Then I would add to the, oh man, I really messed up my example. We're gonna redo it. There's 2 ways to do it. It's like you can catch this one and then add on the continuation, right? So something like this, where you won't jump ahead too far this time, right? And then you could add to it. So it's like, hey, do you want to use $5,000 worth of profit to add to it? Because it's like you could either trail using my model, right? So now you're guaranteed 4,000 in this, right, as an entry, or it's like you could add to it. So like, let's say I want to sell more, right? So now I just used $4,000 to increase my risk to reward by 9,000, right? So I just added a 2R trade essentially. That's all I did without adding risk. But the only thing with this is like, what can happen is like, that's a bit of a riskier entry. But what can happen is if you're too aggressive with adding or pyramiding, it's like you'll be in a position, right? That's a winning position. And then you could get stopped out break even. It's like, okay, you just turned a winning position into a break even position. I don't know. It's like I don't really talk about it that much because it's gonna be confusing for the majority of people. Today was a bit tough. Yeah, no, it is definitely tough. Nothing super obvious for me. EOT, could you give me an example of what you look for in the daily hour 5? I read your course section on alignment. Can only use two time frames there. Yeah, let's I mean we can use I'm just gonna use silver as an example because I think that's probably the best to put it together for you. The entry is not gonna be the best one, but we'll work through this example for you and we'll just walk through it, right? So you're in chat still, right? Ian, are you there? Okay, cool. So I'll just have you respond to me, but looking at this daily chart, right? We're just going to start with daily and we want to determine the direction, right? So we want to determine, is price more likely to trade lower here or higher? So like, could you explain your bias there for me or why, right? Do you expect price to trade higher here or lower and why? And there's a few different ways you could go about saying why, but if you can answer that, then we can move on to the lower time frame. Lower because of closure. Perfect, right? This is a candle 2 closure. We've swept the high. We've closed back lower. So then the next question is, what can I mark out on the daily chart? Like what area do I want to see respect for price to trade lower? Right, is there something you learned in the equilibrium section? I think that's probably the easiest one to think about. That's why I have it just marked on my chart always. But yeah, we're going to want to see the lower half of this form. Right, so if this will really help when I get my videos re-uploaded today, but I want to see the wick of this higher time frame candle generally form in here, right? Now, let's say price trades higher. It doesn't mean I'm immediately switching my bias. It just means that instead of with a small wick expecting price maybe to go all the way down there, it's just, oh, maybe it just goes into here, right? But cool, right? You now have a bias, right? So now we can go down to something like an hourly or 4-hour, right? So we can use hour or 4-hour. Which one do you want to use? We can do it with either. If you prefer daily profile with a 4-hour, we can do that, or we can just go to the hour. Let's see, both? Yeah, we'll start with the 1-hour, then we'll go to the 4-hour, right? Cool. Okay. So cool thing is that hourly, that daily closure, it's also marked out because that's a model, right? Cool. Now, what it means is I generally want to see price in here. So let's go through this real quick. If I see price close below here, right? And it would have had a bit of a weaker close in the lows. It's like, I don't want to see this high taken or reach into this fair value gap. But with this, right, where would be our point of interest here? It's kind of that only point of interest we can mark out. Right, so now I'm just going to wait and say, okay, let's see what happens, right? And I don't know what session you trade. I trade New York, so we'll use that for the sake of this example. Let's see, does price trade up into that? Yes, we do. Okay, so now we're just waiting because what do we wait for? We don't need to say, hey, we're going to short this right here with our stop up here. Boom, right? We can just let the chart tell us what is up, right? So we're going to need a swing high to form. Okay, that's a nice closure, right? We just used the closure on the daily to tell us that's bearish. Can we do that on here too? Yeah, right? We have a nice closure here. So technically in London, I could short this, but I like to trade New York because this is going to be a reversal. But if we have a swing, what is the entry sequence, right? Swing point, then formation, right? So it's a reversal sequence, entry sequence, right? Then I want to see a close below here. So do we get that? So now we do. So what is this called, right? We just went through it with the logic, right? But That's the intra-candle change in the state of delivery. So that means inside this daily candle, we have an intra-candle change in the state of delivery. This is the way that I have mechanically found out how to explain to people that, hey, the logic is open, high, low, close. I'm just anticipating that wick to have formed, right? That's all it means. So now I can be, I'm bearish into the lows, right? We get into New York. Do we have any point of interest in here? We take a look. We do, right? We have this. Now let's talk about something. If there's no fair value gap here, let's go ahead and draw something out. Only then do I use this level, right? But since I don't, I can use that. Sure, I can use this as a confluence, but I don't want to use the order block alone. Okay, we reach into there. Do we have a closure? Oh, we do. It's also an ideal formation. Okay, because like I said, the ideal formation is when we form what? We are forming the swing, and this swing is now protected in the same candle because it closed below the up close candles that made it. Right? Cool. So now with this, what have we determined? We've had a bearish bias. We've let this wick form. If we're anticipating it to continue lower, we now have a swing aligned with that. So now our daily candle is bearish, right? We're anticipating it to be bearish. We've formed the wick. Our hourly is bearish. This is when we can then drop down to the 5-minute, right? And then from here, right, we'll just remove everything for the sake of things. Give it one more candle. And from here, it's saying, okay, now if I'm expecting price to trade lower, where do I want to see the wick form? It drew it out, but we have 0.5 of this area, 0.5 of this area, and we blend those together. We want to see this area, right? Now in this area, do we have any point of interest? We do, right? So we could anticipate price to trade higher into this to trade lower. Cool, right? That's kind of what I showed in the last few examples. Did it do that? No, right? Now, a few people took this positionally, right? And what they did was they're bearish enough, they're biased. This framework is good enough to that they don't want to be left, right? So they'll just go ahead and say, hey, I'm just going to enter the open. I know I don't want to put my stop here because what? I want to see price trade into that high, right? So I could put it there or just above the fair value gap, right? And then where's 2R? There, right? Cool. So that's going top down from the daily to the hour to the 5. Now, how do you blend that with the 4-hour as well? Well, all you're going to say is we go down to the 4-hour. Do we have a closure on here that you think is bearish enough to confirm this daily wick? And I'd say, yeah, because price retraces into this fair value gap, expansion retracement, candle 2 closure. So now we expect candle 3 to go lower. Well, what time is that candle 3? Well, we just come back to our 5-minute. That is right here, right? Opening up this new, oh, hold up. Went way farther ahead. Right? We open this new candle, right? And then we want to align that with the hourly, right? So once this hourly setup forms, like now we have our 4-hour where we anticipate the wick to have formed because price reaches up, change in state of delivery. The hourly we anticipate, right? So it's just all, I'm just letting the wicks form and then trading it in one direction. Does that help? So that's really all you do. So like we go to YM, for example, today, because you could trade this with RTY, right, off the lows. We're in the middle of some random time. Right? Why did YM make sense? Well, we have what? We have a daily candle, right? Now this is what I said is a small wick, so I'm more so looking back towards the daily open or those session highs and lows, right? But what do we notice? Do we have an hourly candle closure? Not yet. Do we have a 4-hour? Not yet. This 4-hour we see closes what? It closes as a reversal candle with a large wick. And what do we notice about this hourly closure? That candle 3 closure, right? So we expect continuation in candle 4. So now you see how like all these time frames are pointing in one direction. That's when the expansion occurs. So really all my course does is it tries to do this and teach it mechanically, which is like very hard to do, right? Because it's all logic. But that's the whole reasoning behind it. So The wick formed is the creation of the CIC. Yeah. So when you form the wick in the new time frame candle, right? Like when we form this here, it's like that's the intra candle change in the state delivery here. All that is oh, inside this candle, it's inside this a change in the state delivery. Inside this, it's a change in the state delivery. So then now I'm expecting this to expand till when? 11, right? I would, if you think the 30-minute and 3-minute is too fast, then the hourly and 5, and that is what I would recommend for most people. Hourly and 5 is a solid time frame to let you make decisions, right? You see, this is all on 5-minute. All right, let's see if we can. Ideally, you can finally take out these lows, right? Go back to the 5 here. Oh, we're on gold. That's why I'm tripping. Right? It's a bit weird to leave those lows. But once again, the same thing is, look at this, ready? There will be people that say, hey, I'm just going to limit these highs or these fair value gaps, my stop here, right? Cool, that's great. Does it work? Yeah, it does in this case. For me, I'm like, I don't know if price is going to reverse here because I never know what's actually going on, right? But what I can do is I can use the data to tell me what is going on. So I see, okay, we trade higher here. Do we have a swing? Oh, we start to form a swing. Is this a closure that I trust? No. I let another one form. Is this a closure that I trust? Yeah, this is way more bearish. If I wanted to take that, then I can take my stop there. Let's say I have my stop there or there. Where's 2R? Right around the lows, right? Does that make sense? Like my whole idea is letting the wicks form. And in this case, you're trading, and we can go into it. No, we're not going to go into that. It's just a bit messy. But that's my whole mindset on stuff, right? It's like I'm just going to let the market tell me what it's doing. I'm not trying to guess. When it is okay to use a breaker unicorn formation, I don't use them, but it's always going to be the same, right? Like if I have this change in the state of delivery here, it's like that's usually going to be a breaker block. Cool, you can use that if you want. All right, we go back down here. Okay, we have a change in the state of delivery here. You can use this breaker block as you want. I just don't know. I used to use breakers in mitigation. I removed them from my model. Take like 10 months, a year ago, I used to have breakers mitigation in my model. Wait, no, not a year ago. It's more than that now. A year and a half ago, I used to have breakers and mitigation. And I'd use like discounted premium in certain ranges. The thing is, it's you don't need too much. Like you're probably thinking about too much and then it causes you to not execute. It's finally ready. Gold. Yeah, you've been looking for those gold to go. What do you mean the 30-minute and 3 minutes too slow to keep up with price action? You don't see any openings? I think you're gonna have to expand a little bit more on what you mean. I would say the 30-minute and 3-minute are pretty quick. Like that's pretty quick time frame, right? Is it correct? You don't need a point of interest. So it's better if you have a point of interest, right? And like you'll notice, like I prefer that. It's just sometimes when everything is aligned, it doesn't really matter, right? Like this stuff's aligned in here. Do I need this hourly out of a point of interest? It's like, you know, yeah, I do want it out of a point of interest, right? And a lot of times they'll fail. It's more so like I want to see a sweep of a high low or reach into a fair value gap. But there are times where, hey, my 4 hour is reacting. I don't really care about a point of interest on the hour because I already have that point of interest from the higher time frame. Right. So sometimes the narrative outweighs the lack of point of interest. Maybe I shouldn't have framed it that way or said it that way, but I was trying to get in on this long, but no openings on the 30 and 3. On NQ. Micro in NQ. So go to the 30. So the one thing you'll notice about my model is you don't trade reversals. So if 930 is what makes the low, which in this case it did, I'm not going to catch this first move, but I can trade the continuation following. So if I look here, that's a valid entry. So then I can be looking for that 3 minute, right? So 3 minute, I'm looking for longs out of this area, right? Okay. That's something I could trust. I could look to get on side and with that, right? Because it swept out this low previous, right? If price is going to continue to expand, right? That's just very choppy. But I wouldn't say that, like, you're not missing moves with the 30 minute and 3 minute. If you really need faster time frames, like that's your mindset, you need it, then go to using 15 minute for swing points. Right? The only thing is you're going to get faked out a lot more. And what I've seen is most people struggle with those time frames, which is why I say the hourly 5 minute, 30 minute, 3 minute. Like if you ask, the most people I've helped become profitable are on those time frames, specifically the hourly and 5 minute. So that's kind of a decision you'll have to. Oh, what's the first entry on that long? Well, if we go back to the 30 minute and 3 minute, I may have to end the stream soon because my battery. Well, the first entry would say would be discretionarily. There's only a discretionary entry in here. Otherwise, I'm not catching anything. So that's about it. Otherwise, once we close over this level, you expect 50% of it to hold. So it's like if I'm long anywhere in here, I need my stop like down here so it can run those lows out. Which is why I said I likely wouldn't enter anything in here unless I'm just entering in here. My bias is strong. But just because you miss one day of a move doesn't mean you need to drop lower time frames. I think that's how you're going to get chopped up. Discretionary means it's not like a opposing candle or candle closures. It's just, hey, my framework is really good. I expect this low to hold. I'm going to put risk on. But I don't know. I'm trying to save you the time from going to the 15-minute, 1 minute, and there's some people that can do it, but 85, 90, 95% of the people just get railed. I'm trying to use that. If you don't want to listen to it, feel free to go for it. So, am I short now? No, I'm not short. I was teaching it. I don't trade the afternoon. Yeah. No, I'm good. But let's see. Let's see what my battery's at real quick. 8%. All right. I struggle getting a bias on gold and silver as they've been quite different. Yeah. You can have a different bias for each when they're not really together. It's just been a bit weird with that. I'm just bullish metals, and yeah, right now I am. For the projection, do you use the 5 minute? I trade London, so I'd be some. If you want to project out the daily time frame, I'd use the 15 minute. What's the fastest for someone to turn profitable here? I think to like really master stuff, it's been like few months, 2 months. Maybe there's probably some people that are quicker than that, and then they just leave and don't let me know. Like it's not like everyone is like updating me, like, "Hey, you made me prop." Like they just use the information and leave, right? And then there's some people. It's like after, for one example, I won't say who, but you know, we had a one-on-one session. All we did was correct some psychological and mindset issues, and then like barely any strategy. Went from like making no money to lots of money now, you know? So it's like everyone has their own different things. Do you only trade New York? Yeah. Um, like see if there's a model forming and trade. You analyze the market and wait for a point of interest to be hit, or wait for the model regardless of time. So I use top-down analysis, so I need to have that bias, or like I will never just randomly slap my model every time it forms. That's a great way to lose money, because my model is like this indicator is like technically my model, right? But if we go turn on the history, throw a bunch on here, it's like, yeah, it works, cool. But there's going to be a lot of times where it's like, hey, I want to be buying in here and this. I need some sort of trend analysis, right? Like, look at this. Like, it's bearish in here. Let's say I just go in here and I switch it to bearish. See how that cleans it up and like how much better it is? So, yeah, I don't just slap something. How do we not get confused with the closing wick versus next opening wick and identifying and changing the state delivery? I don't really know what you mean. Change the state delivery is using bodies. I'm not super worried. I don't know what you mean closing wick versus opening wick. Like in here, right? Price reaches into a fair value gap, closes through, right? Like I don't know what you mean opening closing wick. 30-minute wick formations. I still don't know what you mean opening and closing though. Just like here, right? Like that's a wick. I don't know what you mean opening and closing. Like that's just wick. Only trade clears day setups. Yeah. I don't like to lose money. Like that's me. I just don't like losing money. I'd rather sit on my hands than just like get cut up. Struggling with risk management and over trading. You know what I'll do is I'll go back to the one session I did and I'll just grab the notes from it. I'll just share it. Live in Pacific time, LA. Looking to trade M1, maybe Asia. Whoa, crazy. Not that crazy, but considering my 9 to 5 lack of sleep example using H4. I'll probably have to find those examples later. We're at 4% on battery in an hour and 10 minutes. But if you message me in chat, we can go through that. Part of the package we get. So yeah, there you go. Shinobi dropped it. That's what I wrote up for him. But it's a separate thing. So unless you have like the elite collection from him, it's separate. Send the name. Send the name of what? Updated video. No, I don't have an updated video. I just made one where it's, if you really want to aggressively trade prop firm evals, you just risk half the drawdown for 2R. And you either pass it in one trade or you lose half the drawdown in one trade. It's like a random video in my chat from a long time ago. But that's like, you have to have good habits and then do that. Just do that, you're gonna end up, like if that's how you approach everything, you're just gonna blow up and waste your money. So, all right, I'm gonna go ahead and end the stream there before my computer dies and I lose the video. Let me